We are talking silver today with Peter Hug, Director of Global Trading at Kitco Metals. Pete, welcome back.
It's nice to be here again, Danny.
Yeah, so let's talk the gold-silver ratio, currently at around 85. It's a 25-year high. So what's weighing down on silver here, Pete?
Well, I think a lot of the issues with silver are basically the trade issues that are forefront between the U.S. and China. Some slowing in the EU economies, creating some slackening in demand on the industrial side. I think silver's getting hit from two sides. One, obviously, the recent weakness in gold south of $1,200 has obviously dragged silver with it, but on top of that, you've had the global sort of slowdown in industrial demand that's also had an impact, especially through the summer, and that's caused the silver to underperform gold over the past 2 or 3 months. I don't think that's going to last, though. I wouldn't be short silver at these levels.
Okay, so are we not seeing enough bargain hunters step in here, Pete, for silver?
Well, we're seeing some physical demand pick up silver side over the past, say, 2 weeks, especially, yesterday we saw a flurry of activity south of $14, but it didn't stay there long. It was only under 14 for the better part of minutes. The U.S. Mint has sold out its 2018 Silver Eagles. They're trying to ramp up production. So there is a bit of a squeeze on the 2018 Silver Eagle market. Which has also increased the premiums on the Eagle. Some wholesalers are up almost 25% on their premiums to the retail dealer market. So there is interest at these levels. It's just that we're not getting the catalyst to move it higher. But the markets in general, from a pro perspective, these markets are extremely short on their book, gold and silver. It's not going to take a lot from a catalyst perspective to create a short covering rally, which could, especially in silver.
All right, Pete, just to wrap here, thoughts on the Fed meeting coming up on the 25th? Will rates rise as markets are pricing in here?
Yeah, I don't think they can back away from the September increase. I think it's fully priced into the market. A quarter point is pretty much guaranteed. The surprise would be if they didn't move. That would be a pretty shocking event, I think, for the markets, not only the equity markets, but also the commodity markets. So I think the quarter point is factored in. Today's producer price index was the lowest since 2017. It missed by almost 40 basis points on the projected number. So there is some speculation that the Fed, after September, may not be as aggressive going forward until they see that inflation number spike up again. So based on that, there's been some softness in the 10-year U.S. bond today, which has created some short covering in the metals, and that's why you're seeing gold right now over 1,200. Started the day at 1194. And silver was at 14.05 this morning, now trading 14 and a quarter.
All right, Pete, good thoughts from you. Thanks for joining us.
Pleasure. Thank you.
And thanks for watching. We'll be back tomorrow.